Hello, everyone. Welcome to a brand new episode of One Vision. This is Theo, your host for today's episode. Joining us on the show today is a very special guest, Allison, Chief Marketing Officer at Alkami Technology. Welcome to the
Hey,
show, Allison.
hey, Theo. Thank you so much for having me. I'm so glad to be here with you.
I am so excited to have you on the show. It's been a few months since you and
Yeah.
I chatted at CoLab.
CoLab. Yep.
Oh, that was my
It
first
feels.
CoLab. That was so
I
fun.
we were so glad to have you grace the stage. You were amazing. Your insights were so on point. So thank you for joining us
Oh,
there.
thank
It's a lot
you.
of fun.
Thank you for having me.
Yeah,
And I
of
loved
course.
our conversation, having Jim and Jennifer. We were talking about generations, we were talking about digital banking, and I think it's perfect for what we are going to be talking about today on
Yeah.
generational trends. So I learned something new. Confession
Tell me.
moment. I recently learned something called anticipatory banking. It's from your very own report on generational trends in
Yeah.
digital banking. That caught my
Yeah.
eye because anything around generation, around being able to anticipate what people want, I'm like, oh, wait, this is cool. So, for those in our audience who might not be familiar with the concept, can you briefly walk us through what anticipatory banking means and what inspired Alchemy to adopt that concept and do a report on it?
Yeah, well, thank you. It's a mouthful. We like the anticipatory banking. It just rolls off the tongue. But no, I jest. Where did it come from? So we have looked at how does transformation happen with consumer technology? And there's typically a three-phase arc that you can look at on just about any major consumer technology, digital banking included, what it goes through over the journey of transformation. In chapter one of that arc, it's all about just replicate a digital twin. So if I'm looking in the music industry, that would have been when Napster entered the scene, near and dear to our hearts, Theo,
I
being
remember
Gen
Napster.
X.
Yes.
We all remember Napster. If you know, you know, and if you don't, we feel sorry for you because you missed out on a the digital twin of music, no longer having to buy the physical media. But I think we'd both agree, Theo, that it wasn't exactly the best user experience. So, chapter two in transformation, that's when companies start focusing on user experience. That would have been when Steve Jobs came in and introduced iTunes and the iPod and finally made getting digital music something that was a joy to do, not just something that you could do if you had the means and the time, like Napster. So, chapter two is all about a better UX. And then chapter three is what we were calling hyper personalization at scale. And in music parlance, that would be the Spotify, right? That would be streaming that is curated to our unique interest to serve up anything literally in the world that we could imagine, even stuff we can't imagine, designed to fit our needs and our tastes and our wants. And as we were going through this, we're like, listen, this is going to be and has been the arc of what we're calling digital banking. Started as the digital twin when Stanford FCU first replicated what the branch experience was, but did it on a at the time a PC on an online device, ultimately moving to mobile banking. We're right smack dab in chapter two in this industry largely. Still a lot of focus on the user experience, making that as engaging as it can be, as easy as it can be, as frictionless and intuitive as it can be. And we're starting now to turn the page where leaders are starting to separate with this hyper personalization at scale. And again, we were really trying to find what is the right word or nomenclature to really put a finer point on this because personalization has been really overused in the industry for a very long time. And what we were trying to get across is like personalization means that you might know what I like, meaning that could be everything from the aesthetic of the application, serving it to me in a particular way, maybe even understanding what I want that I know I want, but not making me call you for it. So you're kind of intercepting my needs without me having to express those to you. But to anticipate the needs goes one step even beyond. That would be knowing what I want even before I know what I want, even before I know I have an unmet problem, let alone that there's a solution for that problem, right? So that's where we were trying to figure out what is the right word to get to this hyper personalization. And as it turns out, our CEO, Alex Shootman, was on site visiting one of our customers, as we do all the time. And he happened to be at Broadview FCU talking to their CEO, Michael Castellana. And Michael Castellana, in the course of that conversation, as Alex was talking about this, that we see these three phases, he said, I think you should call it anticipatory banking. And Alex literally came back home, called me, and said, he's got it. Michael's got it. It's called anticipatory banking, and the rest is now history. And that is where we are now evangelizing this far and wide in the industry, that this is really the future of where we're going. It's to anticipate the needs of our account holders before they're even conscious thoughts, let alone known as unmet needs that they don't even realize they have.
It's amazing. I love that story, and I love how you do the analogy from Napster to iPod to Spotify. That's something that's is easy to remember, to understand, and to relate to. Because when you were talking through it, I was thinking about cassette tape and pencil.
Oh, yeah.
Remember?
Oh, yeah. Oh, yes. Like you said, if you know, you know. We're talking generations, and hopefully there are fellow Gen Xers out there, even though we are the smallest generation, only in size, not in might, by the way. But maybe there are some Gen Xers and boomers still out there. Now, if we've already lost all the millennials, and forget it if there's one Gen Z on here. We haven't. They said Napster, what was that? And like I said, it's unfortunate but true that they didn't get to experience the thrill that was ripping an MP3 off Napster.
That was quite an experience, right?
It was an
Compare that to
experience.
having to sit by the radio and hit record right when the DJ plays it, and I could never get it right.
Get it right. And then they would always talk over the beginning of the song.
Yes, see? Perfect.
I know. They'd mess up the vibe. I know exactly what you mean.
So
we've all been there. We know.
That was how I was so excited. I'm like, oh, yes, Napster. Oh, no, wait. Yes, iPod and Spotify. Perfect.
Mm-hmm.
You nailed it.
Definitely.
So from that perspective, let's take it one step deeper. You talk about personalization, which is something, and you rightfully point out, is overused. We talk about that all the time, just like
all the time.
Getting ice cream. Do you want sprinkles or you want hot fudge?
That's right.
I'm seeing a theme in our conversation in here.
I know, and I'm here for it. I'm here for it.
So how do you then define anticipating people's needs in the context of banking?
Sure.
Like, we don't even know what we need, but you already know what we need.
Yeah. And here's the great thing. You know, people can talk about things in a way of like, what keeps you up at night? I like to talk about things about like, what gets me up in the morning? So what do we get excited about? What's exciting is that we've been talking about the data chest that banks and credit unions have in their arsenal for well over a decade. I mean, when we were talking about big data back in like 2010, if not before, we were talking about like which verticals had this treasure trove of data, and you couldn't really talk about any vertical without immediately going to financial services. And back in the day, we kind of idealized, wow, can you imagine if your bank or credit union could use your financial data to understand what you might need or to actually help you live a financially healthier lifestyle? And back in the day, that seemed like that was a little too far out into the future to even opine about, but we're here. It's like the future is now and the future is here, and that can actually be a reality. So what might that look like? Well, it's things that we've talked about for so long that quite haven't had the pieces all the way together in the puzzle to go realize that now have come together. Things like looking at my transactional history, seeing where I might be spending more of my money in places like whether it's car repair shops or home improvement stores or the like, and being able to intercept me with, some kind of attractive short-term loan to help me either buy a car, do a HELOC, do something to get me more credit, get my credit in better standing. It might look, if one of the big use cases we've tested among financial institutions, and this won't be a surprise, this was a big winner, is being able to use your data engine to understand or detect signals of attrition that are already happening. What could that look like? Because we know a lot of attrition now is silent attrition. Used to be, quote, easy when, people would go in and actually close the account. It doesn't happen anymore. We just go open another account and we leave that one to die on the shelf. So how do you determine that account is slowly dying and attriting on you? One way is to start looking for these little trial deposits that go to other institutions. Obviously, the data is there. The signal is there to see somebody floating a test deposit as an example to a competitive institution? What if you could have a data engine that senses that signal and immediately kicks into gear to intercept or at least proactively offer that account holder a high interest deposit account at your institution? And then the kicker is give them a 5-minute account opening experience pre approved that they can click to approve and deposit the funds right into that high yield account. That's an example of, hey, I didn't even know you had that. I didn't know that was available to me. You've made it easy for me to do that, just like Spotify makes it easy for them to curate my next thing that I love and I never even knew I loved it. It's about really understanding what your account holders are doing or what they might be doing in the future and intercepting with the right technology pieces, be it the data engine, the onboarding and account opening engine, and certainly the digital banking engine for the engagement data to really create that fulsome experience that we're trying to capture.
I love what you just said. I literally just had the same conversation with my husband the other day when we went for our morning walk. We were talking about our banks and our credit card. We're not going to name names, and
Right.
how we just keep getting junk offers,
Yeah.
right?
Yeah.
Why can't they understand us, especially since I've been banking with them for 30 years?
Right.
That makes a lot of sense. But
Hmm.
here's the question though. Why now? How does the intergenerational wealth transfer, for example, that's something you do talk a lot about, how does
Yeah.
that raise the stakes for financial
Oh,
institutions?
so we know we love this. We love this. You and I both. This intergenerational wealth transfer topic. And listen, it is the topic du jour. This and AI. I think AI has it beat for good reason. And that is your domain of authority. By the way, excellent book. Big fan.
Thank you.
So AI definitely wins on the discourse. But I would say in this sector, the generational wealth transfer, you can't go more than a couple of conversations and not have somebody at least comment on it. And this is another one that we've looked at quite extensively, as I know you have. So this big number of this $84 trillion changing hands, going largely from boomers to younger generations, largely millennials and Z's. We never talk Xers, okay? You and I know this. Poor Xers.
With the
We are
quiet
them.
force.
We do. We're the quiet force. We just spend the most money, but we just get passed over. So let's just say from boomers to millennials, that we've seen talked about in the media. We've gone to our regional and community financial institutions. We've gone to 150 of them to be specific, banks and credit unions. And we've asked them two questions. First question: do you think that the intergenerational wealth transfer will significantly impact your business in the next few years? And 60% say absolutely they do. The second question: do you think the intergenerational wealth transfer is being overhyped by the media? And 50+% say yes, we do. So there's this interesting thing going on. Like, yes, I think it's going to materially impact me if I'm an FI. And yes, I think it's also being overblown by the media. And the reason is, as we both know, the 84 trillion, 92% of that is going from the elite to the elite, from the wealthy to the wealthy. So most people say, look, it's the rich passing down to the rich. What we're missing in that is the 8% that is going to everyday Americans. It's talking about the 40% or so of businesses owned by boomers, of which 30+%, I think our good friend Jim Perry said, have no exit plan right now planned for that business. That those assets are going somewhere. They're going to the future asset bearers, the millennials. And those millennials, as our other good friend Jason Dorsey from the Center for Generational Kinetics, I know you know him well, talks about this quite a bit. Look, that millennials are not tech addicted or tech savvy, they are just tech dependent. They've grown up with technology, they expect it in their lives. I joke they came out of the womb texting, unlike the rest of us. And so, to them, having a very strong connected experience digitally, in addition to the omni channel analog channels we're accustomed to, is super important. And our data shows that 50% of all digital banking consumers would switch for a better digital banking experience. So, why is the time now? Because the wealth is transferring, much of it from the wealthy to the wealthy, but 8% out of 84 trillion, that's still a pretty big number to go get. That's passing from quote everyday Americans to everyday Americans. This is the main streets getting more vibrant over time. How do we basically allow the regional and community FIs that support those communities and have from their inception get their unfair share of that? And the time is now to do that.
The time is indeed now. You mentioned Main Street, and that reminds me of what we often talk about Main Street is human touch,
Yes.
relationships, right? Community
Yes.
banks and credit unions, you walk in and they know who you are.
Yep.
How does the concept around anticipatory banking, see, I need to keep
Yeah.
practicing that.
It's
How,
it is a tongue. I'm telling you, you have to really think anticipatory banking, but it
yes.
gets easier over time. I promise.
So how does that scale when we're
Mhm.
thinking about human touch? It almost, do they complement each other?
They not only complement each other, they supercharge each other. So I would say this isn't just an interdependency between the two. This is actually an interaction effect between the two that makes each better. And your point is so valid. When we talk to our remarkable clients, they say, listen, we have grown up in these communities. We are the backbone of these communities. And by the way, that means like supporting businesses and economies. Local economies and the economy at large run on the backs of these regional and community FIs that are there to support the development and the economic investment in these communities when Wall Street is quick to turn away. So it's core to the livelihood of the nation, candidly, and this is where I get really passionate of our nation and the economy at large. But as we think about it over time, what started as those human connections in the branch with a handshake, with a smile, knowing you by name, being able to understand exactly what your goals were, that over time has gotten more difficult as more of those interactions are occurring with a touch, a tap, a swipe, a click, not in those traditional channels. And so this is where we bring in these digital signals. We make those signals available across multiple channels because we've never prophesied the death of the branch. We think consumers are going to interact with you where and how they choose to. And in some cases, that'll be the branch. In some cases, that'll be a call center. And a lot of cases, that'll be digitally. So, how do you replicate that intimacy but do it at scale? That's where you harness the power of the digital engine to not just do that when you're not physically there, such as on the device, but also even when you are physically there with a robust data architecture that actually traverses all the channels in which you support.
Is there a way to do it so that you're building trust and it doesn't feel like as intrusive? Because it's
Icky,
a fine line,
icky,
right? Yeah.
creepy. It can feel creepy.
Uh-huh.
Yeah. And so this is interesting because you and I, especially Xers and especially boomers, are looking at this going, I'm not sure how much we trust this just right out of the
Mm-hmm.
gate. And that's a product of what we grew up with and how we grew up embracing technology. Millennials and Gen Zs don't just trust it, they expect it. So, as we start to think about this intergenerational force at play, how do you not disenfranchise the trust of your boomers and your Xers, but also how do you lean in to what an increasing expectation is among the millennials and the Zs who have grown up with this technology? And this is not just expected, this is actually desired. They expect us to use things like AI to get to know them better. As long as it improves their experience, they're more than okay with that. Our data shows that with Jason Dorsey and team. So, how do you do that? It's all about reading the signals from your membership or from your customer base. And here's the thing: if you are actually helpful and not intrusive in the way that you serve up these suggestions, these recommendations, these nudges, I think what you're going to find, like any technology, what applies to the millennials and the Zs soon after the X's and the boomers follow. I look at my Apple Watch and I remember when this thing came out, right? And I was like, I do not need this thing tracking every step telling me that I'm a couch potato. I don't need it. I don't want it. I don't need you telling me my heart rate. I know I'm not exactly the pinnacle of health. I don't need you telling me that. Fast forward after using it for, when it came out the first few months, all of a sudden I find myself actively looking to take more steps or actively looking to understand what my resting heart rate is or actively looking to hit the next goal of exercise or whatever the case might be. I started changing who I was in fitness just based on the nudges of technology that at first I thought would be intrusive and not very helpful and actually was like worried it might be more annoying than a help, to now not imagining ever having any other kind of analog watch on my wrist because it has become an extension of healthy habits that I've adopted. It's much the same way if you think about your financial health. Having healthy habits adopted is as much about knowing how and when to serve those up and making sure they are relevant and helpful and non intrusive. And before long, those habits start to be acculturated and expected, even by generations like ours that might at first look at that a little bit more warily than certainly the younger generations do.
And that's where you separate the winners to those who can't quite get it, is
That's
knowing
right.
when to do it and how to do it to be useful and to
That's
be
right.
relevant.
That's exactly right. And it's an opportunity, Theo. I mean, our research with Jason shows that, when you look at this relevancy gap, it's a gap that regional and community FIs face, meaning their account holders are far less likely to say that over the past 12 months, the recommendations they've received from their regional or community FI are relevant compared to the account holders of megabanks and neobanks. So megabanks and neobanks are doing a better job as measured by their account holders of being more relevant over time. Regional and community FIs are lagging and in fact standing still because we've now asked this question a couple of years in a row, and we're seeing that that gap is not closing. So, but here's the good news. Like I said, I don't sit around going, what keeps me up at night? What gets me up in the morning? What gets me up in the morning is that data, and especially with AI, as you all know, is democratizing this again. So leave it to technology to every few years be the great disruptor, great equalizer. Where now, even if you were lagging, now's the time, get on the bandwagon, close that gap, and get back to the roots of what made you so special and continues to make you special, which is the intimacy that you've been known for.
The intimacy. What role
Yeah.
does AI and behavioral data play?
Huge. And gosh, girl, let's talk because you can opine on this far better. Like you have forgotten more about this than I'm gonna know. But listen, in this industry better than anyone, the way AI is applied is really what's the most important thing. And we all know that as great as AI is, and I am personally a zealot on AI. I'm not one of these people that thinks AI is going to take everybody's job. I think it's going to transform a lot of people's jobs, but I think there's a lot more upside with AI than I see risk. But where there is risk is just in the models and how the models are trained over time on what data sets that might unintentionally have their own bias in them, their own unintentional discriminatory practices baked in based on how the data has been compiled over time. So, of all this, AI can be the equalizer that allows all of us to have access to the best financial advisor that ultimately was once reserved only for the ultra elite. Now, every man and woman can have access to that great financial advice through AI and agentic AI, as long as that AI is being used responsibly, ethically, effectively, and all that goes with. So yes, it's absolutely part of this engine in a massive way, pours gasoline on the fire in a good way here, but also can cause a fire that's a raging inferno in a bad way if it's not tamed, if humans are not in the middle, if we don't understand the supervision of these models, not just for their own efficacy and ethics, but also protecting these models from bad actors who will use these models to weaponize the data and the AI engines to for their own pursuits. So it's a crazy world we live in, and I'm just glad we get to live in it every day because it's every day is a new challenge.
Every day is a new challenge. It feels like every day we see a fork of the road that prompts you, which way are you taking today?
That's right.
And that's the fun part of it. What would you, I'm curious to know, Allison, how would you recommend financial institutions to look at what technology they need to tap into? How do they even bring this to life? Because I see the concept, right? And I
Yeah.
see how all the different pieces come together. But if we're going back to the main street, the community banks, regional banks, how did they even get started?
So here's the other good news. They already have a lot of the piece parts. They just have not brought the piece parts together. And that is an indictment as much on the vendor ecosystem as anyone else, because no one has glued these piece parts together in a way that is intelligent and integrated. And this is where I'm going to shamelessly plug Alkami, because this is where we are super passionate about changing this for the future of finance. So if you think about it, digital banking has been the core engine for many, many years for these financial institutions. It's a required technology. It's ultimately largely becoming the front door and the only door that many of their account holders use to engage. However, digital banking has historically been used for a service channel. It's historically been used to check my account balance, maybe move some money, maybe remotely deposit a check. It's not been used as a sales channel. And here's the interesting thing about consumers and businesses. We don't wake up one day and only want to have service from those who serve us. We also want to buy products and services. And I think financial institutions up until now have really struggled with how do we turbocharge digital banking into both a sales and service channel. Well, in order to do that, you need a couple of other pieces of the tech stack to really make that happen. Digital banking becomes the center of it to engage your customer or member, but flanking it on either side is an account opening experience that allows me to digitally open any account in a few minutes, 5 minutes or less, because we're all accustomed to the Amazon experience now. We can't get away from it. That's what consumers and even businesses are increasingly looking for, is the frictionless, fast experience, but it has to do it in a secure way. Because financial institutions, if this were trivial, they'd already be doing it. But we know that bad actors use the onboarding and account opening experience as one of the primary vectors of intrusion. So we got to protect it, but we also got to address the need of allowing you to open an account in a few minutes or less while protecting you. There's the sales piece. And then to fuel the flywheel, we need a data and marketing engine. The data engine that reads the signals, reads the transaction behavior from the core, reads the engagement behavior from the digital banking channel to show what I'm clicking, what I'm swiping, what I'm checking, marries those data sets together into a superset of data that now starts to propel a flywheel of reading signals to offer products in a non-intrusive way through a digital banking channel or any of our other channels that I'm supporting, and then allowing that account holder to go into an onboarding and account opening engine that allows me to open that account or buy that product or service in 5 minutes or so. So that becomes the flywheel, what we call the digital sales and service platform. It's onboarding and account opening, it's digital banking, it's data and marketing. It allows you to onboard, engage, and grow account holder relationships at scale to deliver on the promise of anticipatory banking.
What would success look like in the end?
Wow, success looks like a place where these regional and community FIs aren't just competing in a way of offering these great services that they've been known to offer, great rates, great service, great opportunity to invest where others won't, but that they're actually magnets of account holders who also see them as being digitally mature, digitally capable of reaching me and reacting to me wherever I am, however I choose to interact, so that we equalize this playing field from mega banks and neobanks that aren't historically known to offer the best rates, terms, service for consumers and businesses alike. We neutralize that by letting the regional and community FIs not just bridge that gap, but pass beyond neobanks and mega banks in the technology realm of this game. And when that happens, everybody benefits in this country because we get more freedom of choice from better financial partners who now have the technology to deliver what they already do really great, which is offer amazing financial services.
I love that. And that's the one challenge I think a lot of FIs are trying to tackle is how do they even compete with not just
Yeah,
even the big banks, is the big techs,
yeah,
right? They are
yeah,
all coming
absolutely.
in and offering banking services. What do we do? Before we close, I want to ask you this. I want to end it with hope. I
Yes,
feel like that's what we need a lot right now. So,
yes.
what do you hope to see 3 to 5 years from now on how institutions will serve their people?
What I hope to see is more deposits going from Wall Street to Main Street. I hope to see vibrant communities that continue to flourish, where we have the opportunity for every consumer and business entrepreneur in this country to have freedom of financial choice. And you know this better than anybody, Theo, because of your world travels. we stand very unique in this country to have these amazing regional and community financial institutions in the fabric of this economy. Truly unique. In many countries around the world, progressive countries included in this, there is a dearth of financial choice when you look at the number of institutions serving those consumers and businesses. We're super unique and super privileged to have these extraordinary regional and community banks and credit unions right here in our backyard doing the yeoman's work of investing in the main streets of the world, which propel ultimately the total economy. So for me, success is we continue to equalize the playing field. We continue to give these regional and community FIs the respect that they're due and the technology that they deserve so that they can actually compete against the biggest of the giants and do it better and give better terms, service, and capabilities to the consumers and businesses in this country that deserve it the most.
Because when they thrive, our local economies thrive and
That's right.
people are better off. So thank you
That's
so
right.
much for your time. I loved our conversation. Thanks, Allison.
Oh my gosh. Anytime, Theo. I had so much fun. Thank you for having me.
Same here. And I look forward to seeing you in person soon.
I can't wait.
Thank you so much. And for the rest of our listeners, thank you so much for joining us for another episode of One Vision. We'll talk to you all next week.